Hello guys, Joe with BitRaged. So I want to talk to you guys about risk reward. It's something nobody talks about. All we talk about is Bitcoin's going to the moon, cryptocurrency is going to make you millions, and you're going to have a Lamborghini. We never talk about risk and the ratio of risk to reward. If you take a trade, how you should be looking at that trade. And you really should be determining risk first before you determine your potential upside, your potential profit. And the reason you do this is because you can get very emotionally attached to the profit number, but your risk is so great that it just doesn't make sense. You'll lose way too much money if the trade goes bad. So let me give you an example here, and we'll look at what happened in the market. So if you were here and you thought, we're going up, right? So we came from 7,300 and we're up at 8,500, and you were looking in here and you thought, I'm gonna go long. I'm gonna buy and ride this to resistance. I'm gonna buy and ride this to the next point. So let's say you bought here, bought somewhere in here. I'll just say you bought at 85.50. Now what you would want to do is you'd want to set a stop loss. And what I would do is I would set that at previous support, or if there is no previous support, set it slightly below where it's not going to get stopped out if the price drops like this here. So let's say we set it here. We set it down at this level of support here, and we set a stop loss. And then we just wait. And if it goes long, we make a profit. If it shorts and the price drops, we'll lose money, but we'll not lose as much, say, if we waited. So for instance, if you didn't have a stop loss and you bought here and then it dropped to here, well, you've just took a close to $1,000 loss on that trade if you bought one Bitcoin, right? So that's why a stop is really important. Let's say you bought one and you bought one here at 85.50, and then you have a stop here. You're going to lose money. You're going to lose a couple $100, but you're not going to lose $1,000, right? And that's what you have to think about. And really, to consider this, you'd have to consider the upside. So if this trade goes exactly to plan and I enter this trade, it works out perfectly, what is my profit going to be? Is profit greater than the risk? And is it greater by a multiple? So really, a lot of traders like a 2-to-1 ratio. So if you're risking, let's say you're risking 200 bucks, you'd want to make at least $400 on the trade should it go well. And usually you'll see traders that won't take a trade unless it's like 4-to-1, or unless they're making a really decent amount of money in comparison to the risk. If you're losing $100 if the trade goes bad, and you're making $10 if the trade goes well, then that doesn't make a shred of sense. And if you're trading a very small account, not having a risk reward setup is the easiest way to wipe out that account. So if you come down here to where we are now, let's say you saw this candle develop and that looks really good. We see rejection. So you're going to enter a long position here, and you would enter here. Okay, you would calculate, if this goes bad, what is my risk? Let's say this drops off, we go crazy. How much am I going to lose on this trade if it goes bad? Okay, determine that, and then determine if this goes perfect, how much money am I going to make on this trade? So in this case, you'd really be looking at all the previous tops. So 8,000, you'd be looking there to get out of this trade, or 8,200, 8,100. All of these places where we saw resistance in the past, you'd be looking to get out of this trade. And so what you would do is you'd set a target. So let's say 8,000 is our target. We bought in down here at 7,800. So potentially I'm going to make $200. Again, we're just assuming we have one Bitcoin just to make things easier. Potentially we're going to make $200. Now, if this trade goes bad, what's my risk? And what I would do in this case is zoom out a little bit. Okay, I'd probably set a stop down here, and likely I would set it at the bottom of this candle, somewhere in there. You know, so just so if the market does go down, it's not going to get stopped out prematurely. So I set it there, and so we said we'd make $200 in the first target. If we lose this trade and it goes completely bad, we'll lose 80 bucks, right? 100 bucks. So you're going to make 200, you might lose 100. That's a 2-to-1 ratio, right? So it's not too bad. You may want to reconsider this, but you do want to base this on some other things in the chart. So you want to have a solid position first. The stop loss is there to prevent the market from going crazy and you losing a bunch of money. All right, so if you're trading on like Coinigy or something like that, you can go here, set a stop order. You know, you can set a stop buy. So if price hits a certain point, you set an order. If price hits a certain point, you sell. That's how you would set it up. And you want to do this for every trade. You want to get in the habit of setting a stop, setting a limit. So if you do lose the trade, you're not losing $1,000, maybe you're losing $100. And if it goes well, maybe you're making $300, $400, $500. You know, you want to make sure that your reward is much greater than the risk should this go south on you. And a lot of people don't talk about this. Nobody talks about this. All anybody says is if you enter a position, you're going to the moon, and it's just great. But there is a real risk with trading. You have to understand that. Trading is really a game of probabilities. So let's say you're betting on the lottery and you bought $500 worth of lottery tickets or whatever you buy, and the lottery is 500 million. Okay, if you won the lottery, the risk to reward ratio would be really good, right? Spend 500, make 500 million. But the probability of you winning is out the window. You have no chance of winning. So that's what you have to think about. You have to think in probabilities. How much of a probability is there that this trade is going to go well? How much of a probability is there that this trade is not going to go well and it's going to go south on me? If there is a high chance that this could go south on you, well then you would exit that trade. You wouldn't even enter it. So let's say you're looking up here and we're at 9,000. You're like, man, we came from 7,300. I got to get in. This is just going to go crazy. We came down, we built support, we're going to go up. Or we came down here, we built support, we're going to go up. You want to consider everything in the chart. So 9,000 is huge. We have the 200-day moving average at that level. We have serious support at that level. Breaking that's going to be huge. And so let's say you're entering here, you have to consider the fact that breaking that's going to be huge. And the probability of breaking that is less likely than the probability of falling back off. Alright, so that's my spiel on risk reward and why you should set stop losses just to cover yourself. Now, everybody's wondering what's going on in the market, getting a lot of questions, so we'll briefly discuss that here. We came up to 9,000, and obviously we couldn't break it. That's serious resistance. Just couldn't happen. We couldn't do it. And we fell back off. So we fell back off. We came to 77, 7,800, right where this is here, and then back here in the chart. Came to that level. We are building support at that point, right? So there is a potential to build support here and make a run, simply because look what happened to here. We made a pretty decent run up off of this here, excluding the wicks. So right about 7,800, we made a pretty decent run. So you do want to consider that. And we came up, came back down to retest support. If we hold support here, we could potentially make a run. But you do have to be aware of the fact that we have a lot of support in the way. So we have 8,000, 8,100, 8,200, you know, up here at 8,300, 8,500, 9,000 is huge, and we just have a ton of support in the way. So you do have to be aware of that and just watch what the market's doing. So we could definitely build support at this level. That could absolutely happen. But we do have a lot of resistance on the way up. So if you do take a position, you enter a position here, make sure you're covering yourself with a stop loss. Should the market go crazy, should the market go south on you, you want to be able to get out of that position and not lose a ton, assuming you are trading and not holding. If you're buying to hold, that's a totally different scenario, and you have to consider the long-term ramifications if you're willing to sit on a $7,700 Bitcoin. Should we drop even farther? You know, you just have to consider your own risk reward ratio for long-term investments. But there is a very real possibility that this will build support and we could make another run to 9,000. If we do, you do have to be aware that that is 9,000. We have to break 9,000, and that is going to be a pretty serious show of strength at this point. So again, like we always tell you, watch this support level here, and then if this holds, just watch all the resistance to 9,000, see what happens, and make sure you're covered. If you do take a position, make sure your risk is low enough so that your profit makes sense, and make sure you're covered if this does take a dip and you go downside. Make sure you're covered so you don't lose a ton of money, you don't lose a huge chunk of your account balance. You want to make sure that you're not risking a huge ton of your balance, because that's an easy way to wipe out your account. That's going to do it. Trading is a game of probabilities. There is no surefire guarantee. You will lose some trades. The winning trades should outweigh the losing trades, and you should win way more than you lose, but you do want to be covered should something happen that you're not aware of, and maybe you just did something wrong. Maybe you made a mistake. We all make mistakes. You want to be covered. Keep that in mind. Thanks for watching, guys. Take care.